Okay, so that symbolizes that price has been, let me say, equally yoked. Okay, it pushes higher, then lower, then higher, then lower, then higher, then lower. All right. However, there's something called inefficiency, and it is a kind of movement where it is only one pattern or one direction that is visible. Okay. For example, in this situation now, all right, in this situation, this red candle, we can see that the previous candle before it, the wick of the previous candle before it, didn't cover this candle, right? And the wick of the next candle after it also still didn't cover it entirely. Can you see that? Compared to what we had here, where the wick of the previous candle covered it up to this point, and then the wick of the red candle covered it, covered the remaining part of it. Do you guys see that? Or this situation here, yes, where you can see that this is the big candle. The previous candle before it had wicks that covered it up to this point. But can you see the candle that happened after it? Covered the candle's body entirely. So this is what we call efficiency. All right, but inefficiency on the other hand is this area where you are getting, see this huge push up, all right, this huge bullish candle, that you can see that the wicks of the previous and the candle after it didn't really do much damage. All right, this is where the wick of the candle after it ended. And this is the highest point of the wick that happened before it. Okay, so this area that I marked with the rectangle, all right, is our area of inefficiency. What does it mean by inefficiency? It simply means that at that area, the supply zone, or let me say the forces of supply, the sellers, were unable to even, their impact was not felt at all. Their impact was inefficient. Do you get that now? And it is also referred to as an area of imbalance. All right, it's also referred to as an area of imbalance. So far, do we have any questions from anybody before we start to look at live examples?
None from me.
All right. Does anybody have questions? If you do have questions, please unmute your mic and let's get into it. I'm waiting. Any questions, please? Or should we just go on straight? All right, it seems that there are no questions to be asked. So let's just move straight into it. Please give me a minute. All right, sorry about that. I needed to quickly attend to something. All right, so since we've clarified that, so let's look at a couple of examples of what imbalances are or areas of inefficiency and how you get to trade it. All right. So areas of inefficiency and how you as a trader can take advantage of areas of inefficiency, okay? All right, so what we're going to do here, we're going to look for an area of inefficiency. Now, the way we will do this, okay, is that we're looking for areas where price broke structure after an imbalance candle or after an inefficiency candle. Here, we are seeing a kind of break of structure, right? And then the candle that was the main candle responsible for the break of structure, you can see that the wick of the candle before it got here, the wick of the candle after it got here. Okay, so what do we want to do for this area of imbalance? Or I might even extend it all the way to this candle before it. Okay, yes, so we can take this as our area of imbalance. So what you're going to notice, all right, is since we have this as our area of imbalance, you notice that when price comes back to that area of imbalance, that area is going to act as a support or resistance, as a support in this case, because this one, we can see that price broke out bullish, all right? And what do you see that happened next? Price came back to retest this area and bounced higher. Okay, now, in all sincerity, all right, there are times when price will react from the imbalance itself, okay? But there are other times where what you will get to trade, all right, is the order block before the imbalance, all right? The order block right before the imbalance that actually ended up breaking structure. Okay, so we can take this. All right, yes, we can take this. All right, and if I scroll to the front, you will see how market reacted to that area that I just marked. All right, we've seen how price reacted to the imbalance itself. All right, but now we need to see how price would react to that zone that I marked. The imbalance itself, price reacted to it here. All right, price has also reacted to it from this point. All right, but like I said, you can also trade the entirety of the order block. All right, the order block before that imbalance. Okay, and you see that this is the order block. Price reacted to it twice. This is the third time, all right, that price actually came and reacted from that order block, right? Why is this important? Because this is telling us a story, okay? And that is the fact that the breakout that happened here, all right, was purely bullish, okay? The bearish market, or let me say the sellers, had no impact, or their impact was inefficient, all right? That's why it's called an area of inefficiency. Their impact was inefficient, and their impact did not show at all. It was not visible at all, all right, as far as this time frame is concerned, okay? Do you understand this so far? If you have any inquiries or questions, please let me know now. So far, any questions? Any questions before we move on? We're going to take a couple more examples.
Yes, please. Good evening.
Good evening.
So we are saying that the order block must be before the imbalance for either bullish or bearish markets.
Yes, basically, order blocks, stronger order blocks, all right, or let me say the other blocks that make the most sense are other blocks that happen right before a break of structure, all right? And it is going to be especially important if that structure, that break of structure happened as an imbalance. Do you get now? Because
yes,
that break of structure happening as an imbalance or creating an imbalance or an inefficiency simply tells you that, for example, in this area, the effort of sellers was inefficient. It was really intangible. So when buyers intend to resume their trade back from this area, the sellers are most likely also not be, they will also most likely not be able to do anything about it.
okay.
Do you get it
Thank
now?
you. Yes, I do.
So Jessica, are you clear about this now?
No, I'm not.
All right, what part is confusing?
I don't know, like, can you just take it one more time?
All right, let's take it one more time. I'm going to use a different example.
Thank you.
Let me look for an area of imbalance. All right, good. How many of you agree that this was a break of structure? Hold on. How many of you agree that that was a break of structure?
I do.
You agree that that was a break of structure?
Yes.
And that break of structure happened with an imbalance or an area of inefficiency. Can you see that? Why is it an area of inefficiency? See the wick of the candle before it. All right, you see that this is where the wick of the candle before it got to. And the wick of the candle after it, this is where it got to. Okay? So this area where the wicks did not touch at all, that is our area of inefficiency, right? And what do you notice? You notice that when price came back, price reacted from it, right? But the main thing we are looking for, the major thing we are looking for is for price to come back to the order block that gave us that break of structure. So price to come back towards the other block, all right? Because that would give us something sweet. And you can see that price came back to retest it, all right? Price came back for a retest at this point and then pushed. Can everybody see this?
Yes,
Is it clear now?
it's clear.
Very good. Clap for yourself. My runaway class rep. All right, so let's look for a couple more examples. Quickly. I'm looking for examples that are going to be simple for you guys to understand. Okay, good. So right here, all right here, we have a break of structure. All right, and that break of structure was, it had a bit of an imbalance that was created, all right over here. Okay, let me move this. So we see that this is the area where the wicks did not touch at all. All right, both the wick of the previous candle and the wick of the candle after it didn't touch it at all. All right, and at the same time, we've gotten a break of structure. And what do you notice next? That price went up, all right? Price went up, but still came for a retest. All right, price still came to retest this movement. Do you guys see that? Do you guys see that too?
Yes.
Yes, sir.
Beautiful. So you see that price came back to retest this, all right? But left to me, I would say that where's the other block before that happened? All right, the other block would be somewhere around here. All right, and even though price didn't really react to it so much, right, but price still gave us a tiny bit of a reaction. Is it clearer now? Price will usually most times react from this area of imbalance. Oftentimes, this area of imbalance, if you can find an order block inside the area of imbalance, that area is going to be exceedingly interesting. All right, if you can find another block inside an area of imbalance, all right, that other block is going to be much stronger than the regular one, but I'm sure that we've not gone that far yet. So let's just take it one step at a time. All right, should we take a few more examples?
Yes. Yes, sir.
All right, so let's do this. Let's use AUD USD, or let me use gold. Yeah, gold. Gold is a sweet boy. All right, good. Let me start from. Where should I start from? All right, let me start from here. All right, here we are the break of structure. All right. Can you see the break of structure? All right, that was the break of structure. And the break of structure happened with an imbalance, all right, or an inefficiency. And then you see that after price went down a bit and came back into the imbalance, it's dropped, all right, this drop here. Okay. And then price had to come all the way again to the other block, all right, to react. Okay. So sometimes the reaction is really nice and amazing. Sometimes the reaction may not necessarily be, altogether perfect. All right. But when you are able to understand and identify areas of efficiency and inefficiency, it becomes easy to apply it as part of your confirmations in your trading. Are you guys listening to me?
Yes.
Yes, sir.
Very good. Because, for example, here, all right, this point here, we got a break of structure. All right. After we got the break of structure, you can see clearly that there was an imbalance that was responsible for that break of structure. This is the candle before it. This is where the wick of the candle after it stopped. Right. And if we plot it, you see that price came and reacted from not just the inefficiency, but the other block also. All right. The other block responsible for that inefficiency. Do you guys see it? The other block here. And price came over here and reacted from it. Is that clear?
Yes, sir.
So again, we see a break of structure that happened. This is a break of structure. This is our area of imbalance. Or inefficiency, as you may want to call it. All right. And then price came back into that imbalance and reacted. Okay. Now, remember what I told you about if you find an order block inside an area of imbalance, right? So I'm going to show you one example or two of that one, all right, so that you see that particular one, you learn it, okay? And then when you enter mastery class, it becomes easy for you to trade it. So this was the break of structure, all right? Let me mark out the inefficiency from here to here. All right, that's our inefficiency. So let's go to the lower time frames and check. So what we are looking for is the order block, whether there's an order block inside of this point. All right, let's see 1 hour. What's 1 hour saying? Do we have another block there? Let me go to the 15 or 5 minutes. I'm sure there is an order block inside that area. All right, so this is the 15 minutes time frame. All right, and as far as the 15 minutes time frame is concerned, This here now looks like the other block, which we can even break further and go to the 5 minutes. All right, so this is us on the 5 minutes. All right, and where is our other block? I think I might want to pick this. Okay, so let's go to the 4 hours and see if that is where price actually reacted from. Remember, it is just an order block inside our zone. All right, it's an order block that was found inside of the imbalance on the higher time frame. And looking at this, can you see that that was actually where price reacted from and continued going higher? All right, so let's go back to the daily time frame. This is the daily time frame. This is the imbalance. This is the other block that price reacted from. Did you see that? Did you guys see that, please?
Yes.
All right, good. So let me see if I can give you a few more examples, maybe 1 or 2 more. Efficiency and inefficiency is actually very simple once you can identify it. All right, because once you're able to now identify it, that's when you can now attach some other interesting confirmations to it. All right, that's when you can now attach, okay, this is. All right, and then it begins to make so much more sense. Let me use a different chart. All right, good. So here we see the break of structure. All right, solid break of structure. All right, this is the imbalance or the inefficiency that broke our structure. All right, so this was the area of imbalance that broke structure. So what we're simply going to do is that because now we are looking for entries to sell, all right, so let's go inside that other block and look for, let's go inside that inefficiency and look for other blocks. So let me do 15 minutes. I hope you guys are learning something tonight too. Hope I'm not wasting your time. All right, so this is the area of imbalance. I'm going to mark out the other block now, and then we'll go to the higher time frame to check if that was really the point where price reacted from. All right, we can mark this. And the reason why we are marking that is because this particular one has already been mitigated. All right, but maybe I can still try and mark it. I'll give it a different color though.
Please, sorry, what is mitigation? I don't understand mitigation.
Mitigation is when an order block, when price has come back to an order block or has already reacted from an order block. So we say that order block has already been mitigated.
Okay, thank you.
You're welcome. All right, so let's now go to the higher time frame. Let's go back to the 4 hours. and see where exactly did price react from inside that area of imbalance. So what do you see? You see that it's actually, this is the other block that was mitigated that I told you guys about. All right, this one. So you see that that was not the one price reacted from because it was already touched and price already reacted from it. All right, but see this one now, you see that that is the exact one that price came to react from. Do you guys see that?
Sorry, can you come again? My network was so bad before.
From what point in particular, please?
I'm trying to connect, but the network is frustrating. This particular point, sir.
What was the last thing you heard?
This, you said you want to show us another example of this inefficiency and imbalance.
All right, I think I just did. But no problem. We'll take another example. Just hold on.
Okay, sir.
All right. So let's look for another example. You guys give me one commodity that we can take a look at. Just mention one commodity. Then we'll look at that one. For the sake of those who joined late, all right, for the sake of those who joined late, definitely just chill, all right? The video will be released for everybody to benefit from, okay? So we're not going to be hoarding anything. We're not hoarding knowledge from you guys, all right? But if you have questions, you can always reach out to me to ask, all right? So
let's do Aussie dollar.
okay, so let's do inefficiency breakout. All right, let's look for an area where price gave us a breakout with an imbalance. A breakout structure with an imbalance. Beautiful. But this is so far away from where we are. It's all the way to last year. This example is going to be a tough one. Let's use this. Let's use this. Let's use this area.
So is it almost that the imbalance break structure before you can trade it?
If it breaks structure, it's all the better for you.
Okay.
If it doesn't, it's going to be a bit risky. All right, so let's look at this break of structure, right? This particular one, this small one here. All right, let me circle that zone. All right, so this is our area of imbalance or inefficiency. This right here. Okay, that's the inefficiency that was created. Okay, so what we're going to look for on the lower time frame is the other block inside that inefficiency. Okay, so let's do that. 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 All right, so this is the 5 minutes time frame. So I'm just going to look at where the market created the most recent order block inside that imbalance. All right, and then I'm just going to mark it. All right, that has been marked. All right, so now we'll go back to the 4 hours time frame and check the price really react from there. So can you see? I want you guys to see this clearly. All right, I want you to see this clearly. Can you typically see price got here, reacted all the way, came back there again and still did what? Reacted, even though it was just a small fractional environment on the 5 minutes time frame, all right? It was just a fractional order block on the 5 minutes time frame, all right? But still, because it was inside this area of inefficiency, all right, price had no choice but to react from it. Is that clear, people?
Yes.
All right. So any last questions? Any last questions? If you came late, don't bother yourself. All right. I'm gonna drop the video on the YouTube channel so that you guys can all watch it at your own convenience. All right. So just search for either EasyFX Academy or Dr. Bills. All right. So you will see all the videos that I have done, all the tutorials I have done for Dr. Bills Academy on YouTube. Once you go through EasyFX Academy, Dr. Bills, all right, you find all of those videos on YouTube. Okay, and it's all for free. Okay, knowledge at at such phases, all right, or at these levels can be gotten for free. All right. Maybe later on we can now start talking about you maybe reaching out for advanced mentorship or for maybe to learn more. But at this point, this is typically free. Okay.
Okay.
So any final questions? I really feel like taking one last question.
So I want to ask you a question.
Okay, go ahead.
So if you want to spot the imbalance, it has to be on daily time frame, right?
No, God forbid. No, my sister, it's not like that too. The fact that I'm spotting it on the daily time frame is because it is easier for you guys to understand how or to see how this is an imbalance on the daily time frame compared to if I'm trying to show you an imbalance on the 15 minutes or the 5 minutes time frame. Do you understand? On the daily time frame, it is much clearer. That's why I decided to show you from that time frame. You get it?
Yeah.
So that's
Sorry,
why
I
I'm
want to
using
ask.
daily time frame. All right, go ahead.
My question is particularly if you want to trade this imbalance, can we just stick to maybe 4 hours time frame instead of using the daily time?
You can use any time frame, all right? But just make sure that whatever time frame you are using, make sure that the imbalance or the inefficiency is clear. Your eyes can see it loud and clear. I don't know if your eyes used to see things loudly. But
Okay,
just
so
make sure
there are
your
some
eyes see it.
imbalance. There are some imbalance that I used to see that you see that the week, maybe a bearish week and a bullish week is almost closing the imbalance. Do you understand what I'm saying? Like there will be a
There is
point.
just a small gap that is remaining.
Yes, I say yes.
Leave those
Can you
ones.
call
Leave
that one
those
an
ones.
imbalance?
Leave those ones. They are traps. Those ones can carry you trabaye.
Okay.
Sir.
Yes. Go ahead, please. I'm waiting. If you have a question, I'm taking one last question. One last question. Ask it now. What is imbalance? Is that your question? I'm sorry, I can't hear you.
I said what is imbalance?
Imbalance is inefficiency, is what we have been teaching since morning, since like 7:05. So if you're asking about imbalance at this point, it simply means you came very late. And if you came very late, like I said, just search for EasyFX Academy or Dr. Bills on YouTube, all right? All the tutorials or all the trainings that I've done for Dr. Bills Academy, you can get them for free on YouTube, all right? Except the paid classes, all right? The paid classes, the pre-mastery classes, I don't release those to YouTube because, of course, people paid to listen to hear me teach such things. You get it? But this one now, I can give you access to this one because it's just the tip of the iceberg. It's just an introduction to a concept. You get it?
Yes.
Thank you. So, bye. For the rest of you that are just joining us, please just watch out for the videos on YouTube, okay? Inefficiencies, imbalance, they are really simple to understand, all right? But it takes a bit of getting used to. So for my pre-mastery students, this is your assignment for today, all right? Before your next class on Monday, I need you to send me screenshots of at least 5 areas of imbalance, all right? 5 visible areas of imbalance that you can see on your chart. All right, imbalance that was that happened as a breakout. All right, specifically imbalances that happened as a breakout or a break of structure. All right, so I will be expecting you to submit your assignments latest 11:59 p.m. on Sunday. All right, are we good?
Hello, sir, please, can you just a bit of the imbalance?
Sorry, you'll find the video on YouTube. It's too late already. You'll find the video on YouTube. So thank you so much,
YouTube.
guys.
How do we get it on YouTube, sir? Which channel should we
EasyFX
follow?
Academy or Dr. Bills. Just search EasyFX Academy or Dr. Bills on YouTube. You'll get the video.
Sorry, I want to ask one. Is a breakout different from break of structure?
Yes, breakout is a breakout of a consolidation. Break of structure is a break of structure.
Okay.
All right, so thank you so much, guys. Big shout out to Dr. Bills. I can see he's here tonight. Thank you so much. I really appreciate you guys. All right, so Monday, by God's grace, pre-mastery class, we have another session